Welcome back to the Malaysian Money Matters show. It's the 12th of August, 2025.
Great to be here.
Today, we're doing a quick but hopefully impactful deep dive into the latest headlines, financial, global affairs, the works.
Yeah, distilling the key insights, starting close to home with Malaysian companies.
Exactly. Then we'll broaden out to national and international news, just the crucial bits, plain and simple.
Sounds good. Let's get into it.
Okay, first up, DRB-HICOM. They're set to acquire Spirit AeroSystems operations in Malaysia, RM426 million. What's the story here?
Well, this looks like a pretty significant strategic move. It's really about boosting DRB-HICOM's position, their expertise in the aerospace sector.
So building capability.
Exactly. Aiming for, greater scale, maybe opening doors for new contracts. And remember, Spirit Malaysia apparently did over $1 billion ringgit in revenue last year.
Wow. Okay. So a solid base to build on.
Definitely. A serious play in a high-value industry.
Right. Now, shifting gears a bit, NEXG. They had their worst day in 7 years.
Oof. Yeah. Rough day for them. The market reacted, well, pretty negatively to their acquisition of a stake in Classita.
And the move into property and construction.
That too. Investors seem quite skeptical about this diversification, especially since the initial earnings from Classita's business, the undergarment side, were seen as negligible.
So concerns about the strategy, the synergy, perhaps?
Precisely. A sharp drop like that shows real investor concern about the path forward.
Okay. Let's look at IOI Properties Group. CGS International suggests investors might be missing something, an improving outlook.
Yeah, they think the market might be overlooking the potential. They're pointing to the expansion of investment properties plus some luxury projects in the pipeline.
Driving earnings growth.
That's the expectation. And interestingly, they mention potential REIT listings, real estate investment trusts.
Spinning off assets into REITs.
Could be. And if that happens, it could significantly, cut down the company's debt. A big plus for the balance sheet.
Makes sense. Okay, how about Indowater, partnering with Johor Special Water?
Yes, this one's about reclaimed water. They're teaming up to develop it, specifically targeting the growing demand from Johor's data center industry.
For cooling those massive server farms.
Exactly. It provides a sustainable, non-potable water source, crucial for data centers.
And it eases pressure on the drinking water supply, I guess.
Precisely. Helps reinforce Johor's position as a developing digital hub, too. Smart collaboration.
Good point. And Petronas, reviewing efficiencies amid low oil prices.
Yeah, with oil hovering around, US $64 to US $65 a barrel, they're actively looking at operational and cost efficiencies. It's an internal response.
Dealing with global supply chain stuff, too. U.S. tariffs impacting things.
That's part of the picture, yes. They need to stay competitive, so cutting costs is key. There's even talk of maybe bringing in partners for certain high capital assets that have perhaps limited value on their own.
Strategic adjustments. Okay, one more company story. Avillion, the hotel operator, a new major shareholder.
That's right. Lim Chai-hak came in as a 15% shareholder via a private placement. About RM11.3 million raised.
And the timing is important here.
Very much so. The funds are specifically for hotel refurbishment, paying down debt, and working capital. And this comes just after their external auditor raised flags, about their ability to continue as a going concern.
So a potential lifeline, then?
Pretty much. That capital injection could be vital.
Okay, let's move to the broader national and international scene. Education Ministry taking action after that tragic student death. Safety audits, bullying system overhaul.
Yes, a really necessary response. They're doing safety audits across all schools, aiming to ensure procedures are followed, and revamping the bullying complaint system to make reporting easier.
Easier and perhaps safer for students to report.
Hopefully. Plus, stricter actions against bullying and even a new character-building program for suspended students, trying to address it from multiple angles.
And this ties into new penal code amendments too, right? Addressing bullying, harassment online.
It does. These amendments specifically target bullying, harassment, insults, identity misuse, including online stuff. And the penalties are quite severe, up to 10 years in jail or a fine.
Sending a strong message.
A much stronger legal framework, definitely, aiming to tackle issues that can have devastating consequences, like leading to suicide attempts.
Right. Okay, switching to tech and investment. Malaysia attracted RM3.29 billion in AI investments in the first half of 2025.
That's a solid number. It
Yeah.
really highlights, growing investor confidence. Malaysia positioning itself as a regional AI hub.
And there are targets linked to this, GDP contribution.
Yeah, the goal is to boost AI and tech's contribution to GDP to 25.5% by the end of the year. That means jobs, thousands of them, hopefully.
Significant ambition. What about Sarawak's energy plans? A state energy council.
Yes, they plan to establish this council by 2026. The idea is to coordinate energy policies, especially under their Sarawak energy transition policy.
Aiming for big investments.
Huge. Targeting RM700 billion over the next decade. Focused on low-carbon growth, leveraging their renewable energy potential, and creating high-quality jobs.
Keeping an eye on that one. And the construction sector, still growing steadily.
Holding strong. Grew 12.9% in the second quarter. Work done valued at nearly RM44 billion.
Driven mainly by private sector.
Largely, yes.
Yeah.
Particularly in non-residential buildings and special trade activities. It indicates a pretty healthy trend in the industry overall.
Good to hear. Okay, let's jump overseas. NVIDIA and AMD, this deal with the U.S. government about China chip sales, paying 15% of revenue.
Yeah, this is quite unusual. They've reportedly agreed to pay 15% of revenue from sales of certain advanced chips to China back to the U.S. government.
As a condition to resume those sales?
That seems to be the deal. Resuming sales of the H20 chip and equivalents. It's bound to hit their profit margins, no question.
And China's reaction?
They see it as, well, an attempt by the U.S. to suppress their tech development adds another layer to the whole U.S.-China tech tension. Very complex.
Indeed. Then there's Australia's move on Palestine, planning formal recognition at the UN.
Yes, a significant diplomatic shift. Planning to recognize a Palestinian state in September. This is a break from their close ally, the U.S.
Why now? What's the driver?
It's framed as lending legitimacy to Palestinian statehood, driven by mounting concern over Israel's military actions in Gaza. Australia's premier used strong words, calling it beyond the world's worst fears.
Could reshape some alliances, perhaps.
It certainly could. One to watch.
And speaking of tensions, Chinese ships colliding in the South China Sea.
Another concerning incident near Scarborough Shoal. Reports say 2 Chinese vessels collided after one was chasing a Philippine Coast Guard ship. Hazardous maneuvers, blocking actions mentioned.
Just keeps escalating there, doesn't it?
It seems that way. Raising worries about potential miscalculation or broader conflict.
Okay, back to economics. U.S. tariffs. Small firms facing a huge hit. U.S. $202 billion annually.
That's the estimate. And Goldman Sachs economists are saying U.S. consumers will increasingly feel the pain, bearing the brunt of these costs.
So higher prices. Inflation fears.
Yes. More red tape, higher import costs for businesses, potentially impacting jobs, and definitely expected to fuel inflation, which complicates things for interest rate decisions.
Right. Trade policies have real consequences. Quickly, 2 more global items. Ninja Van's valuation halved.
Reportedly, yes. The Singapore logistics startup looking at a valuation around US $1 billion in its latest funding round, down from previous highs, signals that funding winter for Southeast Asian tech is still biting.
Tough times for tech startups.
Definitely. Job cuts, CEO changes, falling valuations across the board, intense competition.
And finally, Maersk. Shares rallied despite record short positions.
It's kind of counterintuitive, right? The world's largest listed shipping company saw its shares jump about 50% since April, burning those who bet against it.
What does that tell us? Trade is still flowing despite tariffs.
It suggests global transport demand, outside the U.S. at least, is resilient. Tariffs aren't stopping all global trade. Many products are just hard to substitute locally, so they keep moving.
Fascinating resilience there. Okay, that's a wrap on our headline deep dive for today. Hope these insights help you connect the dots in this complex landscape.
Absolutely. So much interconnectivity between local business, national policy, and global events.
For more analysis like this and crucial updates, make sure you subscribe to the Malaysia Money Matters podcast. Thanks for tuning in.
See you next time. Hey there. Thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.